London-listed palm oil producer DekelOil has just reported a record production in the fourth quarter of 2017, a 49% increase in the same period in the prior year. Lincoln Moore joins us now from the company. What's been behind this number? We'll get on to the rest of the year in just a minute. I know there's been a difficult year in some parts of 2017, but this last quarter.
Yeah, certainly a return to form, I think, is a headlining statement. I think there's a few things. Last year, Q4 was quite low, so we were competing against a relatively low Q4 last year, but you know, we certainly come off in different Q2 and Q3. I think we'll probably come to some of the issues in Q2 in a second, but in Q3 we had not a lot of momentum during what is a relatively low production period out of the high season, and I think, you know, certainly you can see confidence has been restored, potentially with our smallholder customer base is returned in numbers, and momentum is certainly there as we head into the high season, having those smallholders back in support.
Yeah, I want to take a look as well about your business, the model and so forth, and these small holders which have an interest in the company, obviously through growing the palm oil. Just talk to us a little bit more about what happened last year then, because you mentioned Q2 and Q3. I think it's important to put this record production into some sort of context as to how low it was earlier in the year.
Yeah, there's I guess the story of 4 quarters are all very different, really. Q1, which is the first part of the high season, was very, very strong. We had great pricing as well, and really strong financial results through Q1. Q2 is the second part of the high season, and we had a number of mechanical issues with the mill, which led to around about 24 days that the mill was not operating, which is, you know, is not great in a period when you should be producing at your close to maximum. Then, of course, if you know your mill, or my feeling is that the mill is not operating as you enter the low season, where of course you're fighting a little bit harder for the fruit from the smallholders. It's not a great place to be, having turned some of those smallholders away to other millers. So look, a little bit was that, and a little bit is just a low season. Q3 was, agriculture-wise, I think quite low, and I think that was the major reason. And we saw Q4 a rebound from an agriculture perspective, and the farmers were there in numbers, and certainly surprised ourselves, really, the production numbers, and I think surprised a few in the market.
Yeah, I mean, so you got all the issues sorted out with the hardware now. Have you replaced everything that needs to be replaced, and you're up and running for a good 2018? Certainly
hope so. I think, you know, one of the opportunities, I guess, that you have in the low season is to take stock of things that you can do and prepare for the high season coming. You know, we're aware of some of the things that potentially could go wrong. The major one was boiler breakdowns, which was something we had identified actually 6 months earlier than last year's high season, and ordered a second boiler. So when the boiler goes down, you have an issue where you've got to wait for it to cool down, you've got to fix the issue, then you've got to wait for it to ramp up. So each down time for the boiler can lead to 5 or 6 down days. So we had two issues of such. We have a second boiler identical to the first operational now, so we have the opportunity now, if there is a boiler issue, just simply to switch to the second boiler. There were other issues too. We had an issue with our kernel separation process, just purely the way that the separation process didn't keep up with the speed of the rest of the mill, which required you to, you know, in basic terms, slow down the whole mill's operation, which meant in days in the peak season where we were able to produce, say, 300 tonnes plus of crude palm oil per day, we were producing 220, 230, and those sorts of issues add up. And then a deoiling tank breakdown, which has been rectified. But the second issue has been rectified and coupled with a upgrade to our mill. So to free up the kernel separation process, we've increased the capacity of the whole section of the mill around it, and what that's meant is the mill can operate during the peak periods at 75 tonnes per hour versus 60 tonnes, and of course the throughput of the kernel separation is running at that speed too. So bodes well, both from a de-risked production next year in the high season, and also an increased capacity.
Yeah, this time last year you announced a maiden dividend, didn't you? A progressive dividend policy, I think you described it as at the time. Is what happened during this year going to affect the dividend at all next year, or are you still on for good results?
Yeah. I don't expect so. We've said in our announcement today we still expect the financial outcome for 2017 for the 4th year in a row to be record results from a revenue and profitability perspective. I think I've used the words double-digit growth previously, and comfortable to use that terminology again today. Clearly we wait. The end results normally come out in May, and at that point we'll announce the situation with the dividend for 2017. But I suspect there's still going to continue with that dividend. Clearly, if there was some catastrophic issue during the high season, you'd perhaps rethink about it. But all things being equal, we'll be continuing with the policy of a progressive dividend.
Yeah, I think you've said in the past that you are vertically integrated, aren't you? So you grow from seed the small plants and you bring them on and you give them to the community, don't you? So the community can then harvest them and produce the nuts. That's still in place, isn't it? You still are environmentally and socially aware within the Côte d'Ivoire region, aren't you?
Certainly, I think nursery this year was record plant sales. I think it was something in the region of 850,000 plants that we sold this year, which equates to about over 5,000 hectares of equivalent planting. And we did a lot of that in partnership with the World Bank, who was subsidising the cost of the plant for the smallholders. So for us, it's great recognition that the World Bank wanted to work with our particular nursery and company to deliver that initiative for small farmers. And it really is critical for us because, clearly as we want to grow production, a lot of it is coming from these smallholders. So the more plants we sell, which we've sold, I think over the last 5 years, over 20,000 hectares, these plants eventually return as fruit into our mill. So we're adding to the capacity of fruit in the region, which then allows our mill to increase in its production.
And the growers still on side. I mean, obviously, it's all about pricing, isn't it? And paying them for the product. Everything is going well. There's no disharmony or anything within the producers.
Yeah, I think you're spot on. I think the major issue with any business is pricing. So the smallholders want to be paid a fair price, and we offer the same price that's offered in the market, and what's driven by a committee called AIPH, which is the smallholders are part of, we're part of, the cooperatives are part of, which sets the way that the local pricing works. So the situation is very stable. Everyone in the region understands how pricing works. Smallholders are clearly supportive, as you've seen from the Q4 results. Our meal is certainly attractive to deliver to, particularly in the high season, where the speed trucks can get in and out is much faster than other meals due to the double reception and the automatic tippers. So we are an attractive place to deliver during the high season. We're good payers, which is obviously also very important. And of course, things like we do with the World Bank, initiatives with the nursery, help the relationships with smallholders as well.
Let's bring up the share price and take a look at what's been happening. You have described very well the reasons, obviously, for these declines. Here we are now, 9.7 pence. In the wake of the news, we saw a relatively large uptick in the share price today, Tuesday. How do you sell this sort of chart to potential investors?
Yeah, I think if you've looked at the year-on-year seasonality, I think if each year you looked at the stock in Q4, it's probably been at its lowest point, which all things being equal is because that's the low season for our production, and the stock price tends to come off a little bit. But what you tend to see is during the high season, this is through 2015, 2016, the stock price moves as production picks up. So if you're able to pick up stock in the 9, 10s, 11s, 12 region, you look on past evidence that you're moving towards 15, 16p, and the only reason it hasn't stuck is due to issues in the back end of our high season of those 2 years. So 2015, it was not something that we could control, but there was a Nigeria currency crisis which completely froze the sale of palm oil in the region and stopped our selling process, which therefore slowed our production in Q2. And then of course the issues I mentioned in our own issues of the milling operations in 2016 meant that our stock price stock price growth was stymied, and then we've drifted off a bit. So what we need to do, clearly Q4, great. Let's deliver Q1, let's deliver Q2. The confidence will be there, and I think we can have the stock price start to reflect what we're really worth. Yeah.
Okay, all right, Lincoln, look, we've got to leave it there, but thanks for joining us with an update from DekelOil. That's Lincoln Moore, Executive Director at the company, looking at the recent record quarter and looking ahead to some good numbers when the full year figures are produced. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.